We get ready to get started. Smash the like button while you're hanging out here, and you know the drill. Markets opening rational across the board, looking good. VIX below triple B. Things are really nice and stable there. The S&P been bouncing off a yellow line yesterday and today, so we'll see what we have. We have some downside move, looks like, at the end of yesterday. Create a little bit of a liquidity pivot type situation up near the upper DD band. I'm gonna draw that up, get everything together, ready to go. We'll be live today on Twitter Spaces as well with Wolf Financial and the rest of the gang. And excited to see you guys this morning. What's up, trading family? How are y'all today? We'll be live on Spaces this morning, so bear with me while I get started. Let's see what else we have to kind of look at. Wednesday, we have JOLTS coming out Wednesday, so that's gonna be pretty big. Thursday, jobless claims, so it's gonna be interesting. And then non-farm on Friday. It's gonna be a pretty chaotic week. Interesting to see how it plays out after all the squeezing we've seen in the last couple of days. Markets, pushed up a little bit, and it's been really nice and strong bull signals going into from Friday and today. So all the rocket scooter stuff yesterday was long and strong across the board, really showing there wasn't any sign of crash. So market's just hanging in there, and I'm curious to see how it's going to perceive the jobs data coming through, to see if we can hint at the Fed no longer raising rates further, and if we can get a zero for this rate hike for this next release. So the question on the street is, are we going to go 25 basis points, or are they tapering fully to zero? And I'll be looking forward to seeing these jobs numbers. That'll kind of hint at that. So. On Friday, we kicked off a partnership with Elite Trader Funding, or on Thursday of last week. So, in lieu of, doing something on the stream, the small account trading challenge I'm still going to be doing it, but I'm going to feature Elite Trader Funding in a new challenge. So I'm trying to pass the combine, or sorry, the combine, the trader eval. I always like call them combines. I mean to call them an eval, just to see. I've never done one before, so just to do it. So we're officially partnered with them. So as soon as that kicked off, we're ready to kick it off. So that's just what the next step is on the stream. So I've already done one trading day with this. It's a 250 eval. I need to go to 215,000. So I need to go to 245. So I'm 2K up on it, and I'm gonna see how well I can do it. We already had a class on it on yesterday, Kevin and everyone else. So you guys got to pay attention to Discord and all the other announcements. You'll want to stay tuned to what's going on. What's up? JPal speaks today. That's correct. In 38 minutes, 39 minutes, JPal's gonna be speaking today. Possibly get a Rocket Scooter show liquidity mats 5 minutes for market open. The 150 account, there's two different kinds of evals. They have two different, or I'm sorry, there's multiple types, but they have two different ones that I'm going to test out. I'm going to try to beat one, then I'm going to beat the other one. One of them is called a static drawdown, which is this guy right here. One of them is called an end of the day drawdown. So this is something we've been talking about since late last year, just, on the business side, as we have a lot of, copycats out there and trolls and weirdos that like to stalk our stream and stuff. We don't like to really announce what we're gonna do ahead of time, so we kind of gotta just do our business stuff and then make a surprise announcement. But I'm gonna still be trading in my personal account, but mirroring the same trades here, same thing. Oh yeah. So we kicked it off last week, had the first space on Thursday. And then got all my account stuff set up on Friday. And then doing my first trades yesterday. So one of them is a static drawdown, and one of them is called end of day drawdown. They're different sets of rules. So I'm going to try the 250 one first, and then I'm going to try the 150 one after that, just to see how it goes. And as an added bonus, we're on Spaces this morning, so make sure you guys tune into that. Yeah, we'll have a referral link pretty soon. They're trying to get that to us. You guys will be able to get a really awesome discount. So, hang out for that. So I'm gonna bug them today to get them to get that to us. Let's go ahead and look at the stats and the things that are going on overnight. We got markets completely rational. Look, we had kind of this excursion right off of the, I guess the non-manufacturing PMI on Friday. Market went up. Russell came down. So the Russell traded to lower lows yesterday. It's interesting to see that, while the rest of the index didn't necessarily do that. Still traded up and somewhat traded higher. We are inside the DD band. So remember, don't look at what you think is going to happen. Look at what is when your market data comes in. So we have rational, 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 no catalysts. VIX looks great. Market's nice and clean today. Right? We have a good candidate for a rational market. Remember, this way I have set up my screens. If you look over here, I've got my 4 futures grid, 2x2. I got the 3 indices that I look at: Russell, Nasdaq, and S&P. VIX on the bottom left, futures, just to monitor the risk interval. Then I have a 4x4 grid of rocket scooters, so I can look at hedge pressure breaks simultaneously, just to see what's going on and make sure that that's UVX1. Just watching those together. We're going to get the data coming through and then get ready to go on here. Is it possible to get liquidity maps 5-10 minutes before the market open? No, it requires market to be open to do the calculation, because there is no pre-market data and options. So the moment the market opens, the calculations are done. The moment the market opens. Pre-market, we have an estimate called dynamic hedge pressure, right? It can do estimated hedge pressures and walls, and we do have that. It's something I have just for the 4 indices, and I have a prototype that I wrote on that. That's what the bot publishes every night at 4:45 Central. The dynamic is that instantaneous calculation at that time. So one of the later projects is to create the dynamic to give you guys that indication as well, but that's a later project. Click this right here, William. This pops out a window. Just pop out another instance. Keep popping out instances, and then you can create a new instance of the window you have, and then you just rearrange them, and then you can do save layout. And of course, the question being, are we going to taper to full zero as in no additional rate hikes, right? Or are we going to still stay the course at 25 and taper off to zero next time? My call when I made that tweet end of last year, I've gotten every single rate hike amount guessed correctly. So this will be the one time I'm wrong if we don't get a zero. So this is the interesting thing, right? The market's very sensitive to the jobs data. So really what's going to be important this week to get a little head start is what Powell says. The JOLTS data is the number of jobs opening, or number of job openings you have that are trying to get filled versus the number of people that are unemployed, which is going to come out. And of course, the number of people that are filing first-time unemployment. All this data can hint at what the jobs market's going to look like, and wage inflation is the biggest source of the current state of inflation that we have. So that can hint at what's going on. If the inflation problem is getting or if the jobs market is showing that wage inflation is coming down, then of course Powell may not have to act. If it's going up, then he may have to act. These are the things that the Wall Street will perceive as bullish or bearish. We open in 2 minutes, so barring that catalyst, we're looking to see what's going on. Rocket Scooter, we have a very cool pre-market check. We have 3 different things we look at. Right? We look at one thing called a risk interval, which is we call our DD bands. You might hear us say the word DD all the time. It's a shortcut name for doomsday. It's a funny word, but it actually is something very serious. If the market moves too far overnight, the market opens what we call irrational, and we don't make trades when markets are irrational. So right now we are flat in the middle. It's a beautiful setup. It means that we're going to open up. We're going to see what Rocket Scooter tells you in liquidity maps and resilience, and I'm going to start looking for some trades, some straight up index trades. I think until Powell starts talking, we're not going to really get a lot of activity. But I'm going to sit here and be patient to go through that to get a trade set up that looks good. So on my Twitter right now. If you guys look on the Rocket Scooter Twitter or on the Matt Twitter, feel free to follow both. I do live stream on YouTube, so anything that we talk about in this space, there's a link there. You'll be able to tune in live and see it visually as well. So you guys want to see us using Rocket Scooter Live, or you want to watch any ticker that anybody talks about, I'll pull up a chart and we can all look at it as well. So we get started in about 1 minute. About 1 minute in, I will start talking about the plays I'm going to make and just kind of show any trades that I'm doing. So they will all be live on the stream, and I am trading live on my stream. So we invite you all to come check it out. Tiger with your hand up. What's going on, man?
Well, we're headed right into the open right here, so maybe good here. I mean, real quick, like we said, shares jump. They reported those fourth quarter results. Blue Pass.
Okay, we're gonna go here 40171. We put the DD bands here. So this is the first time I've ever done a trader eval, so I'm excited to see. It's very tight. We gave a class yesterday. Did you guys like the class yesterday on trader evals? How did y'all like it? Did you enjoy yesterday's class? Was it eye-opening? William, you can rewind the stream, man. Just rewind the stream. If you didn't hear me the first time, just rewind your stream. Oh, you came with the mic drop moment, little blue. Yeah, so it looks like right now SPY. So the first thing I always look at every morning is I look at the S&P. And the SPY is opening in what we call liquidity pockets between a bull zone and a bear zone with hedge pressure at 404. So 404 is a nice bounce to long from. For me, just to kind of play inside of this middle range, it is kind of balanced. It's not bullish nor bearish. So looking at that, it's a pretty interesting setup. Nasdaq came through the same way. Russell came through the same way. All three indices are opening in liquidity pockets, which means not bullish, not bearish. So it's going to be flat and choppy till Powell talks, and this evidence is right out the door saying that. So right now, the only thing I could see is a potential support at 404 with a stop at 403, just to gamble on the idea that Powell's going to say something that'll be perceived as positive. Other than that, there really is nothing else. Underneath 404 on SPY, monthly hedge pressure is 402. There's a 20-point drop today. That'll also match up with the lower DD band. So the two of those together. So what I'm doing, if you guys are just tuning into the space, is I'm actually discussing a trade plan. I'm now 10 steps ahead of what I want to do. I might take a little bitty long at 404 just to trade it back up to the middle, and that's basically it. There's not a lot of proof of momentum today. A breakout would be 405 plus on SPY, QQQ would be 301 plus. So market's neither bullish nor bearish. So it looks like it's all prepped and waiting for Powell to talk. So that's just right out the door. So nothing really until there. So what I'd say now is to try to look for some plays. Some things right out the door, illiquidity pockets on something on our scanner. Talk about breakouts and runners, things that are moving quick. Like Wells Fargo's on the list, Amgen's on the list, Intel's on the list, IBM's on the list. So we got some that are just immediately opening in mRNA, so Moderna. They're opening in a very fast pace. It's illiquidity pockets where markets run from one side of the bull zone to the other rapidly. So I'd keep those front and center just to take a look at which direct, some runners there. Hey, how's it going? Jaguar, Adam, you guys doing anything out the door? Or Ashton?
Yeah, I was long AV.
All the classes are great. Oh, I love you too. So the question is, until Powell starts talking, there's really nothing to come from this. What I would possibly do, mean reversion long up, I will probably take a long at hedge pressure. DD's coming in nice, long, and strong, so we are rational and random. So look at this. Remember, DD is really long and strong, 0.8. So it means we're likely to go to the bull side, and 404 is a nice long setup. So what I'm going to do is, now it requires QQQ to break through hedge pressure, which is right in the middle as well. So what I'm going to do is I'm going to take a long right off of hedge pressure to go to here because DD is positive. An upper band before lower band. We know if Powell starts talking, we start crashing. I'm going to close out because it could be a catalyst, and that's coming up in about 27 minutes. So right now, I'm going to, on the first set of red candles, buy 2 contracts. I can see. Actually, let's see really quick. I mean, buy. in 2 seconds, I'm going to buy at 404. I'm going to put 2 in. Okay, right here and here. Okay, so I'm just going to take a long somewhere in the middle. I'm going to dive in a little bit further at 404 and trade it right back up to bull zone. This is a very tight trade. It's 1 point up. I will bet that we go here. Remember, anytime markets are random, I will use DD to break the tie. 0.82 is nice and strong. I don't know where my resilience is, so let's get here and do that really quick. Well, that's something that's alarming today. Oh, no, it's okay. Resilience is still within reason what it wants to do. So what I need to do is I need to see resilience go positive. This is the one downside to this trade. Resilience is not agreeing with it. And since we are rational, I need resilience to show to go positive. And I'm going to put NASDAQ on here. Remember, when I have S&P at 0, NASDAQ breaks the tie. So NASDAQ being nice and strong looks pretty good for this. Bob J, you might need to log out and log back in. Whenever we push a new release or a new patch, you might be logged out. If you don't see connected market open, that'd be it. Also, make sure you have liquidity maps added to your stream, added to your, to your charts. Bottom left. Okay, so right here, it looks like we have to get a hedge break for us to push higher. So a hedge break would be an irrational market to go up. For my S&P trade to take off, NASDAQ needs to become irrational. With NASDAQ resilience being positive, that's a good setup for my trade. Let me. You mean on the white color chart, not the stock chart? I don't understand what you're saying, Bob. Why is the MRU listed in the infographic liquidity map? Because all mean reversions are the same. They're all exactly the same. If you go to the class, they'll all be the same. So a mean reversion just goes from wall to middle. And so I hope that you guys will do, Bob and William, make sure that you go to and follow up on all the classes. All be the same. Mean reversion, long, up, down, up, short, doesn't matter. They're all wall to middle, pretty much the same. So the market is wall to middle and it pushes towards the middle. That resilience number is an arbitrage indicator that talks about the redistribution of share imbalances in the overnight versus the share imbalance at the end of the day. So in the morning, you have a share imbalance at the open, share imbalance at the close yesterday. Resilience is an exploit of that particular phenomenon where market makers try to unload or redistribute the position they have to take at the close and open of the day. So resilience being a really long, strong number, it shows that when the markets are rational, which they are today, that the NASDAQ is trailing behind the market cap weighted sum of the stocks. So the stocks are pushing up, the NASDAQ is going to push up with it. So when the NASDAQ being as strong as that, which is like a 60 on resilience, it's huge, 60%. SPY is sitting about 15. All things are nice and strong to push up. So I decided to go in on a long just because, you know, the SPY will track the stocks that are moving. And right out the door, it's just green candles. So these indications that Rocket Scooter has, they're all unique. And when you hear the names, if you guys have any questions, the little chat box down on the bottom, feel free to ask them there. Ask me on my stream. We can answer what some of these numbers mean. You'll hear us say hedge pressure, DD, and liquidity maps and resilience all the time. Those are we call them our big three: liquidity maps, resilience, and DD. The combination of them are my three strongest suite of tools to enter positions. So right now, everything's pointing up, with the exception of liquidity maps pointing flat. So the market is flat to up today. I'm taking a small long position because of that. And looking on the scanner to see if there's any kind of breakouts. I know we said earlier today there's Amgen was on the list. Some of them are moving around. Oxy's now on the list. Just looking for things, and breakouts could be either direction, up or down. So they're moving quick, and so I'm trying to see if there's any heavy hitting high market cap movers on this scanner on our list. And really right now it's banking is what's moving, Intel is moving, XLE and XLF, those are the big runners today. So I'd keep all eyes on energy and finances, and finding stocks in that space is what I'd look for. But yeah, so today really there's nothing like long and strong, but there's no evidence of anything selling off. So I think it's just going to wait until Powell starts talking. We got 20 minutes for that, so everybody keep your eyes peeled. Hey Ashton, are you, since you have a mean reversion in SPY, are you doing any kind of iron condors or anything today as part of your setup, plus knowing that Powell's talking? So Rocket Scooter officially partnered with Elite Trader Funding. We've been working on it since late last year. And so that kicked off Thursday, right? So whenever I'm on the stream, I always have to be doing some kind of challenge or some kind of something. Since that kicked off on Thursday, I committed to trying and showing off the accounts on my stream. So rather than making that wait 2 or 3 months and parking it behind my other challenge I'm still doing, I'm just mirroring the same trades in this account and that account. So I'm going to do something slightly harder, which is to try doing a trader eval account. So if you guys hang tight, this week we'll have a link for you guys to use so y'all can get a discount. If you want to try the trader funding programs, be very cool discount. So hang tight on that one. Bob was referring to the legend. Oh, okay. Bob, you gotta start being specific when you're talking. You say on the, you don't have MRLU on your chart. So you mean on the infographic? Is that what you meant? Don't call it a chart. It's just your liquidity map. It's called a liquidity map. My long, yeah, so on my screen you can see the positions that I'm in. I'm doing a 250k trader eval program just to test it out, just to do it. And then after this I'm gonna do a 150k, and I'm gonna get both of these funded accounts and try them both out. QQQ is pushing up to the upside, so I'm gonna show you guys how to do this. And make sure, if you haven't tried out the Rocket Scooter extended trial, for a very limited time only, if you click that link, $35 a month for our $199 a month package. Literally the most expensive package we have. $199 a month is locked to $35 a month for 3 months. You guys can come through our entire training program. If you've been through any of the weeks or days of the training program, how about throw some comments up in chat on what you think about it? Let some of the newer folks know kind of what it's been like for you. Have you learned anything? Has anything changed for you? Even the short amount of time you've been here. I'd like to see a little bit of feedback. So all I'm doing is I'm going to trade like the mean reversion range. We're possibly irrational on the upside on NASDAQ. So keep in mind, this is really all you're looking to see. Resilience on SPY is pushing lower. So this is interesting, right? But we are irrational. So this can be delayed. When you're irrational, the default's on resilience. Now I'll go to -10 and +10 instead of 0 on resilience, just to make sure that the market is convincing me it's coming down. So in hedge pressure breaks, we are resilient. We are resilience not at 0, but we pivot 10 and -10 to look for. Those pivots, right? Yeah. The buffer gets bigger. Hey, morning, guys. Oh, my bad. Sorry about that. So S&P resilience is now coming down below 0, but remember, whenever the markets are irrational and a hedge pressure break, so QQQ's kicked us irrational today, you have to know that we look at S&P -10 and +10 instead of 0 because it's irrational. So today, it's really nice and tight. NASDAQ is still strong. It's greater than 10. So that's enough of a buffer for me to be confident that this does kind of hold. If I were to take a bet, 0.82 means that when markets are rational, it will prefer being on the bull side rather than the bear side. So I can always break a mean reversion by tie breaking DD. What's the range on this one? When irrational, it's 60 plus 60 minus 60, right? Rocket Scooter should update the liquidity map infographic. Don't understand why the call walls are red. Man, dude, it's a color. It's just a different color. Like, if you don't like the color scheme, then make one yourself. I don't understand. Asking questions have nothing to do with what we're doing today. Don't like the color, the picture's there. Just go make it. Go draw yourself one. If you go to a class, you know how to do it. If you don't like it red, go make a green one. Go make a purple one. My color scheme is different than a picture that you have. Man. Just go open it up in Microsoft Paint and change the colors. RS is a game changer and help me have FOMO as much as I'm learning how to be more disciplined. I mean, I love you to death, but... it's not easy, but it's well worth it. Oh, y'all are sweet. RS training has changed your entire way. Look at the market. Colors can be changed in settings. Yeah, you can change your colors in settings. I make my stream green. I mean, gray for accessibility. So that others that watch my stream, red and green, obviously there is a type of color blindness that make red and green hard to see. So on my stream, I just made them gray. Bank of America going through illiquidity pocket. Remember, it's mean reversion. I'm going to break the tie on the long side. So 3 contracts is pretty much my maximum. Resiliences are nice and strong across the board. Nasdaq is looking good, but remember, nothing's gonna happen until Powell starts talking. So Powell starts talking and the market starts collapsing. Just remember, what I'm not going full long in on this one, I'm gonna go just 2, just in case it runs. And if Powell starts talking and we drop into the bear zone, I'll start to pile back in the long, back up to bull zone because of DD. Remember, DD being 0.8 is really, really, really strong. So Bank of America, we have an illiquidity pocket coming down. Let's look at the XLF today. Illiquidity pocket as well. Remember, illiquidity pockets hate the middle. So it's very possible that we get banking pushing to a lower end, and when we get the support in the sectors that are pushing lower, that's when I can actually funnel back in. And this catalyst, and Powell starts talking, is likely a catalyst. Same thing here, XLE in the middle of an illiquidity pocket. It likes to push out of these zones really rapidly. Right. So today, keep an eye on energy and keep an eye on finances today. So everybody, make sure if you want to get into our 6-week training program, $35 a month. The link I just posted, that will get you the access to that for $35 a month. It's a $200 a month normal package, and this is going to be something we're doing just as a limited time to really just get everybody to check it out at least once. And take a look at Intel today as well. Intel's in an illiquidity pocket as well. I'm just looking at the breakout scanner. So illiquidity pockets are ones that are showing rapid moves, right? And of course, markets moving to the upside. Looks like the trade's taking off. So all eyes on Fed today. There's really nothing we can say other than keeping an eyeball on what Powell says. So everybody get prepared to get your FOMC fix on. Load up Financial Juice. This is my favorite news aggregator. You can sit there and watch all the things he says as he's saying them. For BRAX, we've already half one over Jerome will be telling you the link valid only today. The link is valid for a limited period of time. We're on week 4 of the training. Hold on. Make sure that you guys sign up for it. Just join up. You will not be disappointed, I promise. Yeah, there's no short signs right now. All signs are long and strong across the board. Is Financial Juice Pro worth it? I bought the lifetime membership, so I don't know personally. I don't know the difference between the price tiers when they first launched. Amar had sent me an email, the owner, and like we've been with them from the start. Just like, you know, I mean I know those guys, and he sent me an email. He's like, hey, we're doing like a lifetime thing where you can get like, you know, lifetime access. It was like $500 when they launched it. And me and everybody, like almost everybody from our group just went and bought it just to support them. Like, you know, I always like to support technology makers and technology providers. And so I went and bought Lifetime. So I don't know the difference between pro and regular, but they have some extra tools that I know. I don't necessarily use all of them, but they have like a tick strike, which it's like when you turn it on, it's like, it makes noises every single time orders come through so that you can hear across the room like activity. I don't like to hear noises. I know this is a popular thing in some trading applications where you hear like every single time something happens or is active, it gives you an audible signal. I like to listen to just chill music when I trade, but it's I've actually played with it. It's actually pretty cool. Oh yeah, Mythos says $49.99. Yeah, $499 was lifetime for us. I think Mythos went and got it too. Yeah, it's, I mean, infinitely invaluable. You can go inside of here and you can, on your news, you can actually select which news sources you want to watch. And it's an aggregator. So an aggregator just grabs and, okay, resend. Okay, that's weird. An aggregator will just grab and put everything together. Okay, it looks like we're getting some catalyst activity here. So Biden plans a tax increase for those earning 400K. Let's see, market is dropping the bear zone. DD is 0.82. We are moving on this. Oh, interesting. Okay. So looks like we do have something. Let's see, Powell's now starting to talk. There's that volatility we have. Let's double check resilience. Resilience is way negative. Okay, so let's take a look at what we have in front of us, right? XLF, I'm not going to panic just yet, but I'm making sure there's not a catalyst, right? 40.50 to 40.40. Not a catalyst just yet. We need to go all the way down the bottom DD bands. This is great, right? DD long and strong. Market's not irrational. So I am liking what I see to get along near the bottom back to the top. Now, if we lose on the catalyst, let's just see what's going on here. Two contracts have dropped me pretty quick. So I'm going to decide if I want to add to this as well. Hold on. Let's do some. Give me a minute to get my footing on here. This can fall pretty nastily, so let's see what's going on here. Higher. Okay, so he's saying interest rates will be higher than previously predicted. We already predicted that. Interest rates are going to be moving very, very, very high coming in the summer. So let's take a look at what we have. I might just need to close this out. I might just got chopped on a catalyst. Let's go to SPY really quick. Across the board, NASDAQ is not breaking hedge pressure. Monthly hedge pressure 297.5. We're good here. SPY is breaking hedge pressure though at 404 and down at 402. We are at 402 on SPY. This is monthly hedge. Let me double check if this is a catalyst or not. 40.50, 40.27, 47, so 23. Not there yet. Not there yet. Monthly hedge pressure. Do I want to support monthly resilience? Still in the ballpark. Let's grab. Now this is trading in an event, so this is a little dangerous. They move super quick. So this is a trader funded program. Eval account. I definitely want to trade maybe right here at monthly hedge. Monthly hedge resilience though, it's close to -10 and +10. Hold on one second. Let me talk on the space. Today's going to be a DD play. It's going to be... Am I?
I wanted to quickly point out,
Oh, look, it's frozen. What the heck?
market net flow boost trading ticks. Puts are starting to spike and calls are
My trade of 8 is frozen. The data feeds are frozen.
super careful here.
Do y'all see that? Okay, let me log out and log back in. Is the data feed frozen for you? Okay.
All right, so
Well, looks like the trade of 8 is frozen. It's frozen for everybody. Ooh. Wow. Okay. So yeah, it's not letting anything change.
seeing people taking a little tester here on Coinbase.
Is that for everybody?
Yeah.
Wow. Way to go, trade of 8. Bob, you need to watch the videos, and when you watch the videos, they will explain to you exactly right. Liquidity map will change when price moves around. Okay.
I just want to
Hold on
point
one
something
second.
out. Matt, you can test this. I was
Hold on, guys.
beforehand when I was talking about using the rockets tool. I basically said, hey, we haven't really moved much today, but the one thing that I would take if we did do it was if we break 4.
Oh boy, my trade of 8 just unfroze. How cool is that?
Yeah. So
Just unfroze, and I close it out just enough. I think 4,300 is the Eval account a maximum. Literally froze up. I couldn't act. I had to close it out.
Yeah, I just posted this, so if anybody wants to
Fucking Tradevate, dude. Seriously. Of all things. Did it freeze up for everybody? My audio was muted. Yeah, people can't even log in right now. That's okay. Well, that's really crummy. Yeah. Happened to everybody, right? Broke DD low, just sit out for the day. It's basically easy as that. Yeah. So basically I bought it monthly hedge, and then right when I was trying to buy, the data froze up. That's it. It's happened 4 times via Tradevate. Let you connect to Tradevate through TradingView may help someone trap. Well, TradingView has a different connection to Tradevate. It has like this legacy connection that is a very special connection that nobody else can use but TradingView now. They're the only people that's grandfathered into that one, so there's not a lot of traffic. So if it helps, it does sound scientifically possible that TradingView will have a kind of a cleaner path to Tradevate. You just got absolutely robbed. Yeah, well, it happens, right? Is your Tradevate working? It just froze up. Mine's working now. I clicked back on. So how funny is that? Well, yeah. So no, nothing. Just I was up like 2,000 the other day. Yeah, yesterday's trade and down 4. So what happened was the data just froze up, and then it frozen again. This is a technical difficulty. This is just something that happens in trading. You can't be mad over it. It's no use crying over spilt milk. Shit happens. You have a max of compatibility issues with a lot of the software. SPY is completely irrational with a... No. The SPY is completely irrational in a hedge pressure break. So, you know, Powell's talking, there's a catalyst. Everything's just dead for the day. We broke through hedge, we broke through monthly. There's no trading here. It's a sit out day. So unfortunately, when that happened, let's go ahead and monitor and look at a catalyst really quick. These things just happen, so don't even stress. I guess this is one of those characteristics of these data feeds for these trader funding accounts, right? I guess they don't have it's usually like a third-party data provider, and the APIs probably just get clustered with that much volume activity. It's just weird how unstable it can be. But as a provider ourselves, I don't ever want to put blame on them, as obviously being a great company ourselves. I will tell you, data providers and data feeds are something that are problematic across the board for everybody. We have crazy busy days where our data feeds don't come in that easily. Yeah, so today, you know, obviously breaking through 402 is our what we call our monthly hedge pressure, right? And losing that level is very damning to the velocity and to the momentum that we've had over the last couple of days. So obviously with the S&P moving so quickly to the south side off of Powell's commentary, I don't think that again, what I think about the news effect on the longer, greater macro is not really what matters for the immediate day's trading, right? It's easy to forecast that as soon as the market is stable and as soon as we're not crashing because of the effects of QT and inflation, that Powell will love to turn on the afterburners and start kicking up 1 point every announcement, right? That is very common, and there's a common practice. And Powell even talks about studying what past Fed chair people have done, like Janet Yellen and Alan Greenspan. He always talks about, you know, those are his heroes in life. You ever listen to him talk, even when he's not just talking about the state of the market, he's kind of person that carries books around his pocket, right? And studies what everyone else does. Very smart man. He knows what he's doing. And so obviously raising rates very aggressively is not something that is going to be foreign to what Fed policy has ever turned to in environments like this. The thing is that they just won't do it now because we haven't had QT, right? I mean, my whole lifetime, right? We don't know what it's going to do to the stock market, especially in a post-COVID world. Right? We still have some effects with all of the effects that came from all the bottlenecks and shutdowns. So it's a very trying time for, and I like to say, this is the analogy I use, is that you get a brand new Lamborghini and you're speeding down the road. And if you start, you know, you're going to go as fast as you can until the car starts shaking and it feels like the wheels are going to fall off and you're probably going to slow down. So, you know, they aggressively rose rates, which is what we saw immediately last year and this year. And then now we're starting to slow down because when you raise rates just a little bit, it scares Wall Street. And what Wall Street does is they start selling off stock. And what companies start to do is it slaps them in the face in that kind of post-COVID short squeeze when everybody was like, stocks are going to the moon and markets going to all-time highs off of nothing, right? Off of just short squeezing. And so, you know, you slap companies in the face, they're forced to become more efficient. People were sitting at home working on a Zoom call for twice their salary to buy a house that was 50% over market value. What kind of dumb world is that? Powell needed to slap the market around a little bit and induce 5 to 10% layoffs, right? That brought wages down. So we have to watch it stabilize, as he keeps saying, before they make another drastic move again. And with QT on the horizon, it wouldn't make sense to speed up that Lambo again if you know that you don't know how we're going to behave in this type of environment. So interest rate raises, the Fed funds rate, it's not going to directly change the type of inflation we have. The cost push inflation typically and will heal itself over time as the job market and labor market, all that stabilizes. And there's really no handle the Fed has other than to scare Wall Street to force people to lay off inefficient workers. And so we've been seeing that happening across the board. And you'll be able to really forecast what you think, you know, the inflation is going to be like, because you can compare. We always do the same analysis, especially on my stream. You compare the JOLTS, the continuous unemployment, and the first-time unemployment. This is how many jobs are open versus how many people can't get a job, continuous unemployment claims, versus people that just got fired, new unemployment claims. And right now, in the last couple of weeks, all of them have been pointing up, which is weird. Tons of jobs available and tons of people needing jobs, and they're not connecting. It's a very strange environment you're in, but really what's happening is there are certain sectors that can't fire people fast enough, and there's other sectors that can't hire people fast enough. It's kind of like a spot sector inflation, and you're seeing that in other places. Healthcare and energy, for instance, can't hire people fast enough and throw money at them to come work. Other sectors like tech and other places, they're laying off people by the droves. So you're still having like weird inflation effects that are targeting certain sectors. And again, in a sweeping change, I don't think Powell would have any incentive to do anything other than just to wait it out. And if the market doesn't collapse on itself and just heals before, you know, next round of earnings, you know, people have been trimming off their labor force. How efficient is that? What's that doing to their bottom line? And Wall Street's really caring about that right now. That is the telltale sign of productivity. Are we getting productivity growth? Laying off all the, you know, watch Netflix and surf Reddit from home workers that really aren't doing much anymore. Everyone's trimmed up. So you have to take a few rounds of earnings to really see the effect on the economy. And if Pal's got some good marbles upstairs, obviously he's not going to do anything aggressive now until we see the effects of the market pull back for a year. 5-10%, some companies 20% layoffs, and then now how are we doing with that? It's you take a few little bit of a step, you taper off on rate hikes, watch the results, and if the S&P is nice and flat, not collapsing on itself, wait for the market to start squeezing again, then turn on the afterburners. And the recipe of that in the 80s, that the market rallied even with 1%, 2% rate hikes every meeting. The market didn't even care. And that's what I hope we see. I'd like to see that boat perfectly driven in that spot where we can stabilize on our own, but it's going to take some time. So today's scare is just a scare. I think it's to undo all that move we had up on that non-manufacturing PMI on Friday, and really just, the market sell off into these ranges. I just like to sit back and let it watch. I don't like to use this as an opportunity to long or short. I just like to see this as an opportunity for me to kind of sit back and watch. Breaking monthly hedge pressure is what we call an irrational signal. The market is going to topple on itself or maybe squeeze and rally all the way back up. You can't tell. But the aggressiveness and the power is going to be really strong. My rule is I sit out. We lose 402, I'm out for the day, so I'm not going to do much. But in general, using rocket scooter for my targets, building a strong fundamental thesis, and not necessarily gambling when the market's being chaotic is kind of like the cornerstone of how I always traded. I love sitting out when markets are crazy. There's no use gambling when the certainty is so low. Right? All right, I'm back. Never use Wi-Fi when trading Ethernet cable. I don't know. These days, Wi-Fi is pretty strong. I would say that, unless you have a very old generation router. 5 gig bandwidth. I mean, you have a pretty decent. I mean, Ethernet's always, it's an old gaming trope. Like, you have slightly less latency lag on a hard wire than you do, technically speaking, than a router that lasts. But not really. In physics, both electric fields that travel through a wire, which is how electricity actually travels. If you ever thought electrons move in a wire, you couldn't be more wrong. Electricity actually is the propagation of electromagnetic fields radially through space in all directions. The wire isn't even necessary. You can propagate electricity wirelessly through space. The wire just guides the field. But they both signals travel at the speed of light. So whether it's a Wi-Fi signal or an electric signal through a cable, if you have a router next to your computer that's 2 feet away and you have a cable that's 10 feet away, doesn't matter. They're both going to travel at the speed of light. So, little physics there. That's my nerdy side talking. So, unfortunately, we had an excursion off of a data outage. So basically, everything froze up and the lot turned back on. I guess this is what happens, and I have to know that. So that's something you learn on the fly. Remember, learn and adapt. So when the market moved really rapidly, somewhere in here, data feeds froze up and you couldn't see the data. So at some point, I just clicked it so that I wouldn't. Okay, so now we're tapping hedge pressure on the top side. Hedge pressure resiliences are less than 10. This is not a long sign for here, and plus markets are irrational. So Brogan says, coming from electrical engineer, he's right. Ooh. You ever do the... Yeah, so there's a cool... Thank you. Yeah. You ever thought that like electrons just flow from the power plant to your house and then you spin them back to the ground? That's not what happens. Actually, electrons barely even move in a line. You guys are electrical engineers. I just gave you guys like... Hold on. The way that you guys want to see the macro here, and as a trader, I'll tell you from the greater zoom out, is that inflation is a problem, right? The cost of goods and services goes up. Your dollar stretches less. People can't buy as much. Therefore, the productivity growth of the economy slows down. Your GDP slows down because it's not as much money circulating, right? What you buy is someone else's wage, and it goes in a big circle. So inflation slows that circle down, right? If your money stretches less, then you're buying less, and people are getting paid less, and you're buying less, and they're getting paid less, so it goes and slows down. The other side of the coin, you have prosperity, right? Where your dollar goes faster, people can buy more money with a better dollar, and they can lend more money, get loan more money, and spend more, and therefore more salaries get paid and more economic growth, right? So right now we're in this balance of how the economy is actually going to behave. I don't think that it is wise for Powell. Like, if you go out and start raising the federal funds rate, it's not going to change the labor market. It's not going to do anything. That kind of funds rate raise typically destimulates lending in a bubble. Like, you get over lending, and say like the financial crisis last time, you had people buying ridiculously stupid things at ridiculously expensive prices when they didn't have the money to pay for it. Adjustable rate mortgage is a great idea, right? No, terrible idea. And so bubbles like that, you have to poke them with a needle so they deflate before they pop. And obviously, let's just be real here. In late 2020 and 2021, we saw a bubble. Do you guys remember NFTs and crypto? Like, these things bubbled up. And so obviously the rate hikes had to create, I mean, they're not terrible investments, so don't unfollow me because I said that. But it's like tech in 1996 was a terrible investment, but a great investment in 2002, wasn't it? And so you have to think about the timing of any investment, and people are buying things that don't have much utility with lots of money, which further inflated all things, right? So it makes sense to try to, poke a little needle hole in the bubble before it explodes on the market. But it doesn't make a lot of sense to jab at the bubble right now with a knife, but the market is trading lower. If you start laying off everybody, which was what would happen if you go start aggressively raising rates into the uncertainty of QT, what happens is the market can respond even faster by selling stocks faster, and people get more scared, and therefore companies are forced to lay off even further. When you get stagflation, which is high inflation, imagine not being able to get a carton of eggs, and we meme about it. But imagine you and 100 people not being able to get a carton of eggs because you don't have jobs, and it's $40 a carton, right? Because there's one farmer left. So stagflation is like Great Depression type recession. You don't want to go into that. And you know who has to come solve that problem? The Fed. So why would they shoot themselves in the foot and create an environment they have to come rescue us from at 10 times, 100 times the risk to them? Obviously raising rates is something they want to do, and that makes a lot of sense. QT is something they need to do, which makes a lot of sense. But it does not make a lot of sense for them to go super aggressive on rate hikes until they can prove Wall Street is not going to crash the stock market, because that's going to be layoffs, and that's going to be soup kitchens for all of us if that happens. So I don't think Powell's oblivious to that understanding. All his subtext between his commentary says that he's preserving or watching the labor market to see what's going on, which is exactly telling you the same thing I'm telling you. They're going to watch and see before they do anything drastic. And he needs to wait to see if QT is going to scare everybody else. If the real market's slowing down, the real economy is slowing down, they're not going to be aggressive at all. They're probably going to not raise rates, period. They might even start reversing and lowering rates if the market starts crashing too fast. They can't let the stock market crash from here, or else it's fun. Go ahead, Evan. Yeah, go ahead. Sorry. So they're just asking me on the space. Trade debate's frozen again. Yep. I don't know if... Yep. But anyways, that's all I had to say on the fun.
of released before he started speaking.
So it looks like the data feeds are completely frozen up.
Does expect the need to increase the rates more than what was initially expected. Not necessarily in the like most upcoming rate hikes, but just the overall like.
So the question is, do you believe
Does expect to be higher.
as
And then he has said some things like that we all know that some of the inflation
swaps have repriced to price in a favor of 50 bips over 25?
you know, the recent numbers from
Policy rate of 5.6, so we're gonna go at 50.
houses.
That's off of the commentary. I don't think that. I think that's an overshoot. I'm glad that people think that. The market's gonna sell off today, and tomorrow's a dip to buy. I want to see that personally.
A lot more, which brought down some inflation in some sectors.
Yeah. So unfortunately, it froze up,
First place, it was straight.
and there's nothing. Yeah, there's nothing we can do. I'm sure they'll be cool about it. Here's a rule, though, right? For your personal benefit, when you're trading into a catalyst,
Not much new so far. Just, he is saying he does expect
I'm sorry, when you're trading into an event that could become a catalyst,
they initially, which
now that you know that this can lock up
is why
and trade of 8
initial drop
data feeds can lock up, just avoid it when Powell's talking. Those are the ones you don't want to deal. So right now, we are minus 12, minus 11, and getting better on monthly hedge resilience. This is the yellow.
I see stock
How crazy is that?
market news raising his hand. So what's up?
Okay. I'm going to try to log out and log back in and see if that fixes everything. Hold on. If you guys logged, anybody stuck at the login screen of Tradeovate? Just seeing if there's anybody else with that problem. I had one report of that being a problem. You're stuck at the login screen? Oh, what? Okay. Oh yeah, that's okay. So that is everybody, huh? Okay. Well, I learned something today. So I'm going to reset this account. But I guess when Powell's talking, it looks like the data feeds can collapse. That has nothing to do with ETF, by the way. That's they use data feeds from a third-party data provider. If they're just like us, right? The data providers are the ones who handle the data feeds. So I would say whoever the data provider is can't handle the throughput of all that information and volume. So I'm sure ETF will be very understanding. If you guys have an issue, just send them a message and tell them you came from here. Like, you know, hey, I got you guys. I'm from Rocket Scooter, yada yada. They're super cool. We love those guys. I'm sure they'll be more than happy to troubleshoot, help you guys out. The problem is that when you're in a paper trading account, that's not live data. Paper trading account is simulated paper trading data, right? It's a separate data feed, from what I've come to understand. It's not the real bid and ask of the real market. So what you get in that environment is that it's a separate provider reading the real data, creating a faux data feed of like level 2, and then you trading against real level 2 data that's fake data. You're not just pushing a button. That level 2 is really a level 2 of other paper traders, supposedly. That's what I've come to understand. So is that why DD isn't below 0.5? William, what was your question? DD 80 something still broke bottom of DD band. Well, it's an event, right? An event makes the market do different things. When you break through hedge pressure, William, you need to go through the courses, buddy. When you break through hedge pressure, markets are irrational. When markets are rational, you don't use the rules anymore. That's the whole point. You guys have to get out of the habit of always trying to find a signal. We have a stopgap. Irrational, there's 5 rules. Random, there's 3 rules. If any irrational rule triggers, hedge pressure breaks being one of them, none of the correlations are to be used anymore the way that they're designed. DD showing that upper band is preferential to lower band, do not use that anymore. When irrational, that's only a rational market thing. If you don't, and again, the training, the first week says do not skip irrational week. Clearly you've skipped it. You have to learn that part. If you try to look at this like every time moving averages crossing over, I'm going to buy or sell, the secret to Rocket Scooter is knowing when things apply. Sometimes it's 50-50, sometimes it's 96%. I only trade when the stats are high. Do you guys understand? So in this example, DD pointing at the upper band for lower, it can't do it. Resilience, above or below 0, that's no longer the case. When irrational, I need to be above and below 10 to feel confidence. Okay. So right now, being well below -10, or above 10, below -10, I need 10 of fat to give it a little more confidence. The idea that it's -19 and -46 means that it's still wanting to come down. Do you guys understand the difference? DD, 0.5 tilts it one way or the other, when irrational, 0.4 and 0.6. I give it 10 points of fat as well. Yeah, you can expand it. You pop it out, make it bigger. Can you expand it up and down? I don't think there's, we can make a, you mean for vertically? Like that? Like, or do you want the window to be bigger? Because DD has to do with all the stocks. It is a true indication. If you go watch the DD video, it'll tell you how it works. It's not supposed to do that. The SPY is moving before the stocks are. So stocks are still in their bull zones. Like, we can go here and look at it. DD is telling you the real reveal. Like, that's what, you don't have to see it and say, okay, you're supposed to see that and you're correct by seeing that. That's the alarm. Why is DD very strongly positive and SPY is negative? Well, there's an irrational move and people sold the index product before they sold the stocks. People are just dumping SPY and QQQ faster than the stocks are flipping to bear zones. It means stocks are falling from the bull zone, but still bullish. So you can go through here and see that the stocks aren't falling that far. Let's go to liquidity map. Let's pick all these bull ones, and you can see that there's a huge amount of stocks, 156 stocks still in the bull zone, right? So you can see that while stocks are falling, like JP Morgan and all these other ones, they're still bullish, and that's why DD is still bullish. Doesn't mean things can't fall. It's not a directional thing. It's a probability, or sorry, it's a probability. It's a scale that shows that still 82% of the illiquid moves, bull or bear, of market cap is still bullish. And you see JP Morgan crash and still bullish, right? McDonald's, not crash, but like fell. McDonald's fell, but still bullish. Do you see that? AT&T fell, but still bullish. That's the whole point. You're seeing that the stocks, while selling, are still in their bull zone. So clearly SPY being in the bear zone, there's a discrepancy. They need to connect with each other. And that's what you have to say. There's an arbitrage opportunity here. So either A, stocks are going to start selling to meet up with the index that has clearly moved first, or the index is going to rally to catch up, or they're going to meet in the middle. That's the whole point. So when you see that, you're correct, William. You see that and you go, oh, that's an indication that something's going on here. So in an irrational market, hedge pressure break, the index not necessarily trails the stocks. It can move second. So you have to keep that in mind. Okay. Okay. But Trader Bait's never bounced back, so we're still sitting back on this one. I don't pay attention to how DXY or bonds affect the futures market, and I'll tell you how I do this. Unless they are affecting the market, right? So a great indication, I'll give you guys a little tip. Use the MRCI online intermarket correlations table. Let's look at the dollar futures, the DX, right? So this is a correlation on the last 30 days, 60 days, 90 days, etc. Let's kind of start 90 days. How does the dollar correlate with the market? Strongly positive, strongly negative. So 100 would be like an example is, how does the ES and NASDAQ correlate? 93% of days over the last 90 days, which makes sense, right? You have 93 days when SPY was green, NASDAQ was green. There you go. A green day. The other 7% likely has to do with earnings, right? So you have earnings where one day NASDAQ might be slightly red and S&P slightly green. Okay. So if I go in a shorter window, these numbers, you can see that in that shorter window, there's that discrepancy. We just went through earnings season. That's why the correlations are off between the two. On a longer term window, you'll see that the S&P and NASDAQ, right? You can see how they're much more violent with each other. During a recession, you can make a lot of these correlations. So in general, the indices are in the high 80s over a 180-day period in a bear market. In a bull market, they're at high 90s all the time. So with that being said, let's see, is the dollar actually correlating in a short-term window with any of the indices? Here's the Dow Jones. Remember, like closer to 0 would be like neutral, right? So the NASDAQ, no change. The S&P, very weakly correlated up and down, negative. It's correlated, but it's not like 90s, 80s, 70s. I want to see 90, 80s, 70s to really start taking it seriously on any longer term. So dollar, no, dollar, somewhat over a longer term period. So in a fundamental sense, you can start to see it getting stronger, right? On a longer window. And that a lot has to do with the power, the spending power of the dollar, right? Globally, due to inflation. So as a direct correlating factor to affect my trades, it would be kind of like a side note in my fundamental analysis. Really, so the correlation's not that strong. So bam, but that's a great question because it should on textbook, right? It should, but the reason it's not so directly acting is likely because of how slow inflation is to spread through things, right? It's so hard to understand that rapid change in value of the dollar. So in general, well, there is clearly a correlation, right? This is a negative correlation to the market. It makes a lot of sense. It's not like when the dollar has a down day, I'm going to long the stock market and vice versa. If they were the strong 90s, I would do the same thing. Like the strong 90s are why when the S&P is positive, then we say the same thing that we always say, like in a short-term window. S&P will move up, the NASDAQ will be trailing with it because 91% of the time in rational markets, we say the same thing. The NASDAQ will follow what the S&P is doing. So in general, you can do the same correlation. Fundamentally, you are correct, right? It's just the immediate effect. It's clearly that Wall Street cares more on the short term about different things, and in a longer term fundamental sense, they do apply. So it would be part of my fundamental analysis for longer term. How do bonds affect the futures market? You come through here and there's the 10-year, there's a 30-year T-bonds, and it's a very similar thing. It's a weekly positive correlation, right? 60s and 70s. In a shorter term window, it's even weaker. In the shortest term window, it's slightly stronger. You dig out, it's 50. You dig out, it's 60. You dig out, it's 50. It seems to not have a strong correlation on time, just like the dollar didn't, right? It's spot changes. So some months it's better than others. And I think that has a lot to do with just the nature of the spotty, volatile spending power of like certain, like inflation is going to be in eggs, it's going to be in lumber, it's going to be in houses. Inflation's moving all over the place. So some weeks inflation hurts everybody, some weeks inflation hurts nobody. Some weeks inflation hurts the rich, some weeks inflation hurts the poor. So the idea that it's not like a consistent thing everyone equally is suffering on, it's one of those things that you're not going to see a strong correlation because inflation, as I talked about this morning, is hopping all over the place. Right now it's wage inflation in financial and energy industries, right? So a lot of those things that are going on or not creating a strong correlation. Now, if the market was going into a recession, you would see that get really strong. Everybody has no spending power. Everybody doesn't have a job. You know, wages go way up for the people that do have a job. I mean, it can be a really big problem as time goes by. But in general, day to day, it comes down to, you know, if you go like say the TLT, right? It has to do with each individual's firm out there that wants to put investment money into fixed income. When there's inflation, fixed income becomes toxic at a point, right? When there's so much inflation, your yield effectively can be negative. Like you can owe money buying that bond. Example is if you get a 10% yield over the maturity life, but you lose 15% due to inflation, it costs you money to buy that debt and hold on to it, right? So effectiveness, it comes to each firm, and firm may say, oh, that's okay, I'd rather lose 5% here than, you know, 20% elsewhere. It comes down to each firm's tolerance on what they want to do. And the fact that the treasury notes have been, you know, trading down, the yields have been going up for a long time, right? Ever since COVID, the entire bond market's been tanking. The yields are really good. And as soon as the yields start outpacing inflation, most people will see this as a pretty safe investment for a return. So that's kind of one of the things we're looking at. Inflation is good for those with cash ready to buy discounted assets. Yeah, I mean, that's the way, that's the law of becoming rich. Have cash, markets are down. Diversify when markets are up. Yeah. So right now, the question is, people are going to buy this if they see the yield better than the loss due to inflation. Then it's better than cash. So there's a flux of money into notes. Or if the loss due to inflation on your fixed yield is less than the loss of the stock market. The stock market's losing $10 a year or 10% a year, an example, and you think that's going to last for 3 years, and you get a 2-year note that's only going to deflate 3% a year. That's a less loss on a fixed income scale than it is putting your money into the stock market and losing that much, or putting your money into cash and losing that much. So the yield can offset some of the loss to inflation. At some point, there's people that have an appetite for that, and measuring Wall Street's desire to do that is really hard to do. And so this comes down to the risk tolerance of each firm believing the recession length of time. The recession is going to last 5 to 10 years. You know, clearly you're going to see the 2 and 10-year notes start to become more valuable as people start moving their money into that once inflation starts peaking. And people will just park their money there for a fixed yield. When the yields are high, remember, when premiums go low, yields go up. So it's really hard to correlate the bond market to the stock market in a recession. You'll see people likely want to pile into this first, historically. In a longer term recession, people buy safer things first. When markets are rallying, they dump riskier things first and safer things last. And when the market's at the bottom, they buy safer things first and riskier things last. So at this point, people are more likely to buy, like, you know, fixed income based assets and then blue chip stocks before they're going to buy crypto. So you'll have to, like, what I do is I watch all the markets in that order. I'm going to look at the value of the cash markets. I'm look at the value of the bond markets. I'm going to look at the blue chip stocks, which are the safer stocks. People are more willing to buy, you know, McDonald's than they're going to buy Transocean, right? In an environment like this. So, you know, blue chip stocks will recover first. The medium cap, the high risk plays, high yield debt, that's going to come last. Crypto last. NFTs last, right? The market sells off risky first, buys up safe first. So we want to see the safer stuff turn around to kind of show stability in the stock market. And, you know, clearly we are kind of bottoming-ish in the bond market. At the same time, we're bottoming at the stock market, which is very interesting to see, right? But at the end of the day, all assets are having a loss, right? Stock market has having a loss. Fixed yield is having a loss. So in reality, people are just moving from cash back into investments in general, since we're pivoting in October in the stock market and the bond market at the same time. It just shows that people went straight to cash. In a normal environment, right, when bubbles are happening, people will move from stocks from stocks into bonds when there's not inflation. Because a fixed yield of 10%, if the Fed's 2% of your inflation, hey, that's great. But when we're having higher inflation, people are going to move strictly from stock market straight to cash. So everything fell at the same time and everything recovered at the same time. So right now, companies that are managing money, clearly you can see are going back into bonds and stocks at the same time. Doesn't mean they're correlating, they are correlating, but correlation does not imply causation. So the reason they're both moving at the same time, I believe, is that people are now sitting on cash and now buying things back up. They dumped all the things. They're not going to say, the money manager's going, well, let's go buy treasury notes for the next 3 years at the highest peak of inflation. Well, your fixed yield just got gobbled up by inflation. So it's rather, let's have cash on hand and buy the dip and all the things. And I think that's what we're seeing today. Right. So in general, the correlation is stronger-ish today than it normally is. But they will start to detach when inflation numbers come down even faster. You might see fixed income start to gain a little bit more momentum than stocks. I would say that would be my guess. But that requires inflation to come down very drastically. Right? And the community of traders have been looking for those reports to come through so we can get some better feel of the market. Right now we got our February numbers coming through. Still a month late on this, but you can see that people are buying stocks, right? This is the asset manager line. They're buying futures, which means people are buying stocks. There's buyers in the market here, right? People are moving from cash back into the market. It doesn't mean the market's bullish. It just means the loss of the market is outpacing the loss of inflation. And that's how people perceive it. And the same thing, the loss in fixed income yields is outpacing the loss of inflation. So companies are starting to throw a little bit of cash back into all the things. And you can see that while that is producing a positive bias on the net long position of the stock market and the futures market, you can see that there's an equally, arguably slightly faster short built by the hedge funds betting against the integrity of this market. They're betting short like they would have because it's QT. Quantitative tightening is that thing that's going to cause the market to be crazy. And when those full effects are realizing, that's a real recessional slowdown. So I believe that the market is not going to become bullish anytime soon unless it comes bullish by summer. If it's not bullish by summer, we're in a longer haul recession. If this should show this is just a Wall Street hold on a second. We're gonna call it a day. We'll probably do a training session about an hour. We're gonna chill. Love you guys. Again, Trade8 froze up. Data feeds crashed out, so unfortunately that just, I guess that's the nature of, I said I've never done an eval account. I know Trade8 by itself, its own data feeds have frozen up before a couple of times, but in the eval account, this is the first time I've ever experienced that. So what I'm gonna do is I'm gonna reset the account and start over, because that was just impossible to manage. So I guess that is something you'll have to kind of know, but let's think about it, right? Let's not be all poor pity me. Let's work around it. Now I know when Powell's gonna talk, data feeds can lock up. I got another day to sit out. There's another rule. If I see an event on the horizon, let's not trade during event days. That actually was one of the rules that I had in the training sesh on funded accounts, or sorry, eval accounts. So now I know even further. If there's an event on the horizon, let's just not touch it. Let's stay away from all event days related to Fed, CPI, PMI, all the stuff, right? Big news numbers, let the market stabilize, let the event happen, no trading into any event, especially if these paper trade data feeds are gonna lock up. So that's just a new data point. Hey, we learned our lesson, right? So now I'm gonna make a rule. Anytime I take a loss, I make a rule. That's a great idea to go. Yeah, Trade8 is having issues right now, might not work at all. Oh, okay, yeah. So like I said, the folks at ETF are definitely super helpful and they'll help out. Okay. Oh, can you grab my phone, baby? So in general, as a rule of thumb, anytime Powell's going to talk, I'll probably avoid the market. Anytime interest rate decisions come out, I'll probably avoid the market. And that's pretty standard practice for trading anyway. So in all honesty, as Trade8 is the one with the issues, the data provider is the one with the issues. As I can say, I can relate to ETF's position at this point. Our data feeds sometimes go down when markets go crazy. Our data providers sometimes will crash and we won't get our hedge pressures come through because we got no raw data from them. And then you guys look at us like, where's the hedge pressure? And I go, well, our data providers. And so as they tunnel data through to the platform, it's really on them to stabilize. So the folks at ETF are likely going to be able to help troubleshoot. So like she said, wait for everything to stabilize before you do anything else. But I'll tell you from my experience, and they're not. It's not their service that's down. It's the data providers. If I were to take a guess. So every time I have data outages at Rocket Scooter, I know the feeling. I'm like, it sucks. But all I can do is make a phone call and yell angrily at the people who need to push reboot on their computer. I have no magic wand for our data provider integrity. But unfortunately, when Wall Street just gets a huge, massive throughput, sometimes it happens. There's been rumors that people say that, you know, like people purposefully cluster up the data feeds aggressively, like aggressive hedge fund strategies to like confuse and rapidly spoof the markets to congest and lock things up. People say that there's all these tinfoil hat peoples out there that say there's aggressive modern strategies that, you know, people do that advantageously. Who knows, right? Anything's possible in the modern world. We love you guys. See you. Okay, everybody go to Rocket Scooter Discord really quick. I want to give you all a chance to come to today's session and we'll teach it. We're gonna do the extended trial. Still going on, not forever. $35. You'll never be a better use for your $35 than to learn something about trading. We normally charge $200 a month for this. You can hang out for 3 months. At the end, there is a prize. There is a present at the end if you stick around. A prize may be a very substantial discount on the membership. Who knows? It might be better than you think it will be. A lot better. Who knows? Right now, we have a 25% off lifetime, and it will never be greater than that. Once in a lifetime opportunity for those that are that are here want to check us out or have checked us out and you want to take the plunge, that is the cheapest way to get everything. Lifetime is no more cost to you for anything, and you can have our program, our product, everything, data feeds, all that come to you for free for the rest of your life for a very low price. 25% off now, and it's in the Discord. Link is in the description below for that coupon. Anybody can use it. Anybody until the end of the week. Yeah, Intel was in a liquidity pocket. I saw this illiquidity pocket. I saw it this morning. Okay, guys, we'll see y'all later. Love y'all.